Welcome back, FinTechies. How's it going? It's Kyle Bazzi here, president of Benzinga.com. We got a good one for the data geeks and everyone that loves those obscure data points coming up. We are with Mike Parsells, CEO of Global Debt Registry. Mike, what's going on? Mark, I'm sorry.
No worries, Kyle. Good to see you today. How are you?
You too, you too. I was just talking to you a little bit about the business. This is a very interesting one to me. Before we get into that and I start diving on and getting into a lot of the details, tell us how all of this started and what you guys are doing.
Well, Global Debt Registry is the way to think about it. It's like the DMV for a bank in that it tracks non-performing debt that is charged off and no longer available to consumers. It's a tracking system and a repository to hold all the data. And for consumers, it's kind of like Carfax. So, you don't buy a car unless you first check the history. Similarly, we've just launched at Finovate back in September. We launched a consumer site which is for consumers to be able to look up debt before they pay.
All right, we're going to get more into that in just a second, both sides of it. How did this all start? The CEO, was this around for a while? Give us a background of the company a little bit.
Yeah, sure. It was founded in 2006 by a debt buyer who realized that chain of title was a really big problem in the debt collection space. He would buy big portfolios of debt from banks or from other debt buyers, and then he'd find out a few months into it another company was calling those exact same people. And the problem was you could never buy debt with a chain of title. And what that enables is a marketplace which is ripe for fraud. And so it was founded to try to clean up that problem in the industry. But when it was initially founded, it wasn't really built with the kind of robust technology that a bank needs to build. So I'm a banker. Everybody that we hired into the company is a banker. And so we bought the company from this guy, and we've completely rebuilt the technology. So we've really been out and live in the market in the last year.
Awesome. Okay, so most of the companies that we've interviewed here, we had a better sense of what the actual problem was. Something like this is a little more obscure. Can you talk to us about just how big is this problem and how many people is it affecting?
Yeah, on the surface it seems obscure, but when you look at it, it actually is a gigantic problem. So in the United States, there's $3.4 trillion of unsecured debt. So there's 11 trillion total. Most of that's mortgage debt. But for the unsecured consumer debt, there is no central tracking system. So think about it. There's 50 state DMVs. There's 3,600 county deed recording offices for mortgages. There's a patent registry. There are ship registries. There's the DTC, the Depository Trust Corporation for stocks and bonds. But for consumer debt, there's nothing. So the problem is that $100 billion of that debt is charged off every year by banks. So they're required to take it off their balance sheet after 180 days. And what happens is there's this gigantic debt collection market. So $1 trillion of debt has been sold over the last 10 years. And consumers, there's now 77 million consumers in the United States that are in some form of debt collection. That's a big problem. And consumer complaints about debt collection are the highest category of complaints with the Consumer Financial Protection Bureau. So this is a huge problem, but it's obscure because no one really understood what the problem is. The problem is there's no chain of title. There is no central system to hold all the information for consumer accounts which have been formally closed, and there's no way to be able to validate who's calling you. Do they own the debt? Are they authorized?
All right,
But
that's fantastic. We're going to get into some use cases in the business model, but real quick,
sure.
how do you create something like chain of title or that central depository for all the debt collectors?
It's actually very simple. So when an account is charged off, we register that debt. The bank registers that debt with Global Debt Registry, and we issue a universal debt identification number. That number is just like a VIN number. So think of a car. Our car is produced, it has a VIN number. So then it is given to a dealer. And then when the dealer sells that car, there's a title from the state, right? And that title is signed by the dealer, and it's signed by you, Kyle, the buyer, right? And that is your proof of chain of title. Similarly here, once it's registered with us and then it's sold, let's say it's sold from large national bank A to large debt buyer B. So what we do is we do a chain of title document. The bank signs our title document, the debt buyer signs our title document, and we sign it. So that creates a business record, and we actually issue a chain of title, a report from Global Debt Registry for each account. Does that make sense?
Yeah,
That's
absolutely. Absolutely. So, I'm guessing that you have to contact all of these the debt collectors on top of actually the banks and everything. So, in terms of reach, how much of the debt are you guys tracking right now? If that's something you guys actually can report on.
Yeah, well, we don't disclose it. However, we have 55 clients today. For our major banks, and the other are debt buyers. And so the way this works, Kyle, is as long as the bank wants to use this, then they tell all the downstream buyers that you need to register and title the debt. And I'm happy to talk about more of the regulatory requirements and the financial benefits for the banks to do that.
All right, something like this, I've asked a lot of the companies what's their biggest hurdle or obstacle they've overcome or have to face. Coming to a company like this, in the space that you guys are in, what are your biggest obstacles to running this company?
Well, the biggest obstacle is very similar to what Carfax faced when it first came in. So think about it. When you used to buy a used car, you went to dealer A and dealer B. And you had no information about that car except what the used car dealer told you. So the ethical car buyer was getting hurt by the lack of transparency, but the less ethical car dealer was benefiting from the lack of transparency. So when it first came out that Carfax enabled consumers to get information about the car, there was a huge pushback from the industry. Transparency is bad. And but then, of course, now all the legitimate car dealers have really benefited from that, as have consumers, and it's been good for the whole market. Similarly here, this has been a market where opacity is endemic. And so the fact that we have introduced the concept of transparency has probably been the biggest pushback. Everybody gets it, logical, makes a lot of sense, great for consumers, but ooh, you're showing stuff that we've never shown before.
I can tell you've done this a bunch before with all of the illustrations, and I can tell you they're very helpful. So good job on that. All right, so get into the business model now a little bit. How do you guys make money? Is there future ways off of this to make money? From the capital market standpoint, understanding the actual, like you said, getting rid of the opaqueness and actually understanding where the debt is, what are the growth and trajectory rates of it, obviously very important, but how are you guys making money right now?
So the way we make money now is the bank has significant motivation to register all of the accounts. First, from a financial standpoint, that it's very logical. If you have a chain of title and you're selling debt with a chain of title, it's going to be worth a lot more than buying debt without a chain of title. Are you still with me, Kyle? Okay, yeah, you froze for a second. From a compliance standpoint, the regulators have said that original creditors have reputational risk as well as compliance and legal risk for anybody downstream who is speaking to them. So the way we make money is the original creditor pays us a fee per account per month for the life of the time the loan is on the system, and we provide business intelligence reporting on every account, which is included in that fee, and we provide other services as well. I won't make it too long of an answer. We have other fees from the firms that buy the debt. They buy our legal collection package, which is our chain of title report, and they use that to litigate accounts. And finally, there's a storage fee. So there's a data storage fee for all the data that's on the system.
So do you guys have any reporting on any trends or anything in the debt market right now?
Yes. Well, we don't provide reporting now, but when you're thinking about it from the capital markets perspective, logically the data that is going to be captured in a central repository, why we would never share the individual data about consumers, that's going to show a lot of information about trends. So what we are seeing is medical debt is on the rise in a very significant way. And as we've seen, a lot of companies that work in medical debt have approached us, so we've been very educated on it. And the biggest reason that that's the fastest growing area of unpaid consumer debt is under the new healthcare law, the amount, the balance after insurance, you go to the doctor and you pay a little copay, and then the insurance company pays a certain amount, and if they don't pay the whole amount, that's called the BAI, or the balance after insurance. That used to be maybe 5% on average. Well, now that's like 20 to 25%. So you've got hospital systems that were relying on this revenue, and that revenue is no longer available. So not only are we seeing a dramatic increase in medical debt and desire to register that debt, it's become the single largest category in the debt collection industry for complaints to the federal regulators. Excuse me, federal regulators.
All right, that's the interesting kind of stuff that we geek out on. Mark, at the end, we always ask for a 30-second elevator pitch here on why you guys think Global Debt Registry here should deserve the award or should get the award for the most innovative company in the space.
Well, Kyle, I don't think there's a larger problem that can be solved really in the financial services industry. I've been in the industry for 20 years. I've worked at huge banks, and I've worked at smaller startups, and I evaluate a lot of companies like ours for private equity firms, and they're often $10 million markets or $30 million markets. It is a $3.4 trillion market, and it's a $1 trillion problem over the last 10 years. It's going to be another trillion plus over the next 10. This is a big market, and we have the solution.
I love it. Innovation often is defined by the size of the problem. Mark Parsells, CEO of Global Debt Registry. Mark, thanks for joining, man.
Thanks a lot, Kyle. Enjoyed it.
If you want to go see more from Global Debt Registry, go to BenzingaFintechAwards.com. Also check out the other 115 companies that apply to help you create wealth. We'll see you next time.